It's not as hard as learning Chinese arithmetic, but it can be just as spooky. And that is simply, how do I take money out of my retirement accounts, and what's the best way to do it? Hello, everyone. This is Ron Korsher with Cornerstone Retirement Partners. Welcome to today's program. You can reach out to us at our phone number at Cornerstone Retirement Partners, 616-301-2581. That's 616-301-2581. Or go to our website, www.cornerstone-rp.com. It's www.cornerstone-rp.com. Put your information in there. We'll reach out to you, get you an answer for any question you may have. Also on our website, you can tune in, obviously, to today's program, but last week's and last year's and the last couple of years. There's a lot of great information there, and it's always helpful. So today we're going to talk about something that I love talking about. It's not as hard as learning Chinese arithmetic, but it can be just as spooky. And that is simply, how do I take money out of my retirement accounts, and what's the best way to do it? That sounds kind of simple. What if we think about it? One of the most unique things about having a retirement account and then retiring is that nobody's ever had to go through retirement. And it's a whole different creature from saving and everything like that. So where you take your money from in different accounts, what different accounts you have that you've used over time, how much you take out, really important decisions. It gets down to one simple idea. The better job you do of planning for your retirement in terms of, what you want to do to have fun, but even more importantly, how you want to manage your lifetime of income from all the different places you've saved money. That determines the quality of life you'll have, and can you hold on to your standard of living in retirement. So we're going to talk about 6 different things that are really important. You can tune in today's program and get the information. And if I touch on anything today that kind of pushes a hot button of yours, please give me a call. I'm Ron Korsher with Cornerstone Retirement Partners, 616-301-2581. We'll help you out any which way we can. I've been doing this for about 33 years. It's never easy. It's never simple. But when it's done right, you have a quality of life in retirement that really, you can't describe. It passes all your expectations. So let's get on with it. What are we going to talk about? What's important about this thing? You need to have a couple things squared in your mind before we get into the 6 different ideas. Number 1, you need to have a real clear understanding of how much money you need every month coming in from all your different accounts, 401k, IRA, Roth, taxable accounts, bank money, everything. You need to know really how much money you need coming in on an after-tax basis to maintain your lifestyle, pay all your bills, and do some of the things that you've dreamed of doing. It's really important. It really is. It's one of the basic questions I always ask folks when they come in and we talk about that first meeting. We just kind of sit down and I ask a lot of questions. We brainstorm a little bit about different ways to approach the retirement planning. But I always ask this question: do you know how much money you need every month coming in from all your different accounts to maintain your lifestyle? Sometimes people are not quite sure. And that's when I can say, well, let's do this. How about if you just take a look at your checkbook or watch everything you spend for 90 days. That'll give you a pretty good idea of how much money you really need. It's really important because it's one of the foundation building blocks of your whole retirement plan. The second thing that's important is to take a look at the different kinds of retirement accounts you have. Is it a tax-deferred account like a 401k, an IRA? Is it a bank account paying simple interest? Is it a Roth account? Is it a taxable brokerage account? All of the accounts have uses, and keep in mind that every dollar in your retirement plan, no matter where it's located, has a tax issue attached to it. There's always some kind of tax attached to it. And it's really important to try to understand that. So once we know that, here's the first thing that I would talk about. Number one, in dealing with retirement, after we get to the point where we kind of understand what kind of income, what kind of cash flow we need on a monthly basis, is how are we going to deal with taxes? In retirement, this is no secret, but in retirement, the two biggest expenses most retirees will have is number one, taxes, and number two, healthcare costs. If you live to be 85 or 90, healthcare costs are going to go through the roof. It's going to be in excess of $250,000, and taxes are always with us, right? And taxes are probably, based on what a lot of our clients tell us, and I tend to agree with it, over the next 5 to 10 years, what we pay in income tax is going to increase, not go down. You know, it used to be when I got in this business in the early 90s, well, put all your money in an IRA or 401k, because when you retire, you'll be in a lower tax bracket. That's not necessarily true for a lot of people today. So, number one, have a plan to minimize taxes. That's one of the things we spend a lot of time helping our clients in the planning process for retirement before they retire. What are we going to do about taxes? Because every dollar that they need coming in every month has to come in on an after-tax basis. So what can we do now? What can you do now before you retire or into retirement a little bit? Number one, take a look at the kind of accounts you have. Do you have Roth accounts? And do you have a sizable amount of money, whatever that word means? Do you have money in that Roth account? If not, can you help us create a strategy? We can do that to maybe move some money from an IRA account or 401k that's going to be taxed forever into a Roth account that you'll pay tax on one time and then it will never be taxed again. Do you have brokerage accounts, after-tax kind of accounts? Those are somewhat tax advantaged too. See, it's really important in saving to think about where you're saving. What kind of bucket are you putting your money in? You can put it in all tax deferred, which a lot of people do, which means when you take it out, it's always going to be taxed. You can have a tax-free account, a Roth account or life insurance is designed to give you tax-free income, or you can have a tax advantage account like a brokerage account or CD account that you only get paid on interest or dividends. So those are important questions, important things that we go over when people come in and say, I'm going to retire here shortly, whatever that means, 1 month to 5 years. Can you help? And we can help. So if you'd like to have more information or have a conversation where we can brainstorm a little bit about your particular situation, give us a call here at Cornerstone Retirement Partners, 616-301-2581. 616-301-2581. I'm Ron Corser. You can ask for me. We will help you out. You can go to our website, www.cornerstone-rp.com. Put your information in there. We'll reach out to you. So the first thing is, do you have a plan to minimize taxes? Because you're going to be taking money out of these accounts, and you need to have that plan. That doesn't mean you have to do everything. It just means, most importantly, you need an advisor, and we do this constantly, is we take a look where every dollar is coming from and figure out what the tax plan is for that dollar. Because the government has a plan for it, and we need to be really clear on what that plan is. The second thing that impacts us is, how do you take benefits out of Social Security? What's the ideal way for you to draw on your Social Security benefits? So if you're married, you need to deal with 2 Social Security benefits. One of the things we help clients understand is we do a Social Security analysis for everybody. And that gives them 4 to 6 different options on how to access the benefits in their Social Security program. And one of the things I tell folks is, in our industry, there's a lot of confusion about when to take Social Security benefits. Some people say, well, you better take it at 62 because it's going to go broke. Let's examine that for a moment. Is Social Security going to go broke? Well, if you look at your Social Security statement, somewhere it's going to say if no changes are made in the Social Security system by 2034, 2033, we're only going to have enough money to pay for about 75% of the benefits. I'm on a team that says they're not going to cut benefits, but they're going to do things, particularly to our children and grandchildren, that'll help maintain what we get as older people, but it's going to change the Social Security system. So I don't think the government is going to allow the Social Security benefit system to go broke, because we'll vote them out of office, won't we? I know I will. That might be fun, actually. Anyhow, I digress. So figuring out when and how and what's the most beneficial approach to taking Social Security is important, because that will account for a lot of people between 25 and 40% of your retirement income. So it's important to do it properly and right. That'll give you the best long-term benefit and provide the highest level of survivor benefits. That's important too. So whether you take it at 62 or wait until 70 is really dependent upon your current financial and health situation. And I'll touch on this. For example, a lot of people say wait until 70, that's when you get the biggest benefit. And that's true. But if you wait to take your Social Security benefit at 70, you have to promise to do two things. Number one, you got to promise to live at least to be 85 or 86. You got to do that. And number two, you have to consider your current health situation. You know, if you're in tip-top 100% health and you've got enough money in other buckets, other places to maintain your lifestyle, and you can postpone Social Security, then postpone it. But if you have a health situation, I got just recently a client who had what we might call a semi-major heart attack, and he's 61 years old. Chances are it's going to be hard for him to make it to 90. So one of the planning ideas that we're going to be covering is when to take Social Security, when does he need it? So that's important, making the right decisions about Social Security. Also, kind of along this same idea, if you're one of the 7 to 10% of the people who are blessed with a pension, what's the right way to access your pension benefits? Do you take it just on your own life? Do you take it with a joint life and survivor benefit? If you're married, when do you take it? Do you have a lump sum option? It's not as cut and dried as a lot of people think, because sometimes some clients have said, I don't trust the company or that's holding it, I'm going to take the lump sum. Other times people have said, you know, I think I want the annuity payout. And we go through all the options. We make it really clear. It's not just one simple idea. It's all the options available and what works best for somebody like you. So if this is important to you, this kind of analysis, in-depth analysis on creating a rational retirement plan that fits your needs and meets your needs, give us a call here at Cornerstone Retirement Partners, 616-301-2581. Or go to our website, www.cornerstone-rp.com. Put your information in there. We'll reach out to you, get you the information you need to make really great decisions for you and your family.
Tune into Cornerstone Retirement Partners' full radio program, Your Course to Retirement, Sunday mornings at 9 o'clock at News Radio WOOD, or visit cornerstone-rp.com for many valuable resources, including those mentioned on this show and other great episodes of Your Course to Retirement.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor.
Ed Slott's Elite IRA Advisor Group is solely an indication that the financial advisor has attended training provided by Ed Slott and Company, passed biannual examinations on material covered at conferences and in webinars, and met other membership requirements, and does not constitute an endorsement of any kind. Ed Slott's Elite IRA Advisor Group members pay a fee for the educational programs that allow them to be included in the Ed Slott's Elite IRA Advisor Group. Membership does not guarantee investment success. Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services.
Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals or growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.